Welcome to Taking Stock. I'm Amanda Lang. Coming up on the show, did the central bank jump the gun on another rate hike? We have an expert view. And grocers could face a windfall profit tax. Is competition a problem in Canada? Plus, a new bill promises Canadians clean air and water. How hard will that be to deliver in the years ahead? That's all ahead. First, for the week that was in business, it's time for the briefs. Canada's bank regulator this week officially asked the biggest banks to raise the amount of capital they hold in reserve. The capital requirement is designed to protect the banks and the system in the event of a lot of loan failures, which could happen during a recession or steep housing downturn. The bank levels of capital are already exceeding the new target, making the request somewhat symbolic. As symbols go, a gloomy one for the economy. Equifax said this week that Canadian businesses are relying increasingly on lines of credit and even credit cards as their use of short-term bank loans drops. Many smaller businesses already have debt post-pandemic, and data from the credit reporting agency show that bank-issued installment loans declined 2.4% in the first 3 months of the year. Compare that to an 11% jump in lines of credit and a 15% increase in credit card debt. A survey of tourism businesses turned up this dire figure. 45% said they were likely to close within 3 years if they aren't offered loan forgiveness from the federal government. Many in the industry took interest-free loans, which are repayable at the end of this year, after which interest will apply. Loans paid by the end of this year are forgiven 25% of the total. The industry association wants a new deadline to repay 2 years from now, and the forgivable portion to rise to 50%. Canadian consumers continue to defy expectations that higher interest rates will keep us from shopping. Retail sales were up 1.1% in April, 5 times what was expected. General merchandise retailers led the way, with sales up 3.3%. The central bank raised rates again recently and opened the door to further hikes in the months ahead. The Competition Bureau is fining Canada Bread $50 million for its role in a price-fixing scheme that dates back to 2007 and 2011. The investigation began back in 2017 when Weston Foods and Loblaws turned themselves in as conspirators in what they described as an industry-wide price-fixing arrangement. The Bureau continues to investigate other retailers which may have been involved. And those are your business briefs. Well, there is some evidence that inflation is cooling, even if it's happening more slowly than our central bank would like. So the question is, did they jump the gun on raising rates? David Dodge was Canada's central bank governor from 2001 to 2008. He's now a senior advisor at Bennett Jones. David, thanks for being with us.
Good to be with you, Amanda.
So I know it may be not done that a former central bank governor criticizes a current one. But the real question is, are we overshooting? Because that's, of course, the big concern for central banks. They tend to cause recessions by getting the timing wrong on these things.
Well, the timing is very, very difficult. We live in an uncertain world, so there are always going to be a lot of uncertainty and mistakes. But I think not just our central bank, but all of us have been a bit surprised at the tenacity of inflation this calendar year. We would have expected to see a little bit of natural cooling of demand that has not been coming through. Mm-hmm. And so central banks are playing that a bit by year. As we used to say, we are data dependent and are moving slowly. Central bankers are very concerned about the overshoot, because the one thing we know is that monetary policy can indeed rein in inflation, but easing monetary policy can't necessarily deal with sharply rising unemployment.
So tell me, should we central banks and everybody else, more accepting of a little bit of inflation? We have this kind of 2% target that we've had for some time, not forever, but for some time. Should the bank revise that to, say, 4%, and that's kind of an acceptable level?
No. So basically, remember, our range is 1% to 3%, aiming always at a 2% midpoint. So there is flexibility in that. But should we continue to drive to get inflation back to a level where essentially it drops out of the day-to-day perception of life? And I think the answer to that is yes. We should drive to get there. And the reason is not so much economic as it is social.
Yeah.
Inflation is a terrible disruptor of society because it shuffles the deck. And once you get in that situation, then it's dog eat dog or person competing with person. And that is socially very disruptive, as well as the unemployment that comes with it.
So in your view, we've only got about a minute here, David, but in your view, are we now primed for a recession? And is it going to be a harder recession than it would have been, you would have said a few months ago?
I didn't think it was going to be a hard recession a few months ago, and I still don't think it's going to be hard in the sense of unacceptably high levels of unemployment. I don't think we're headed there. We're headed to a slowdown and maybe a quarter or so of negative growth. But we're not headed into recession a la 2008, 2009, or 2000, or anything like we had in the early 80s. So, no, we're not headed into a deep recession.
Well, that is going to be cheering news for many, David. Great to have you with us. Appreciate it.
Good to be with you, Amanda.
David Dodge, senior advisor at Bennett Jones, and, of course, a former Bank of Canada governor. Coming up, Canada's grocers are still on the hot seat with accusations of making a profit off inflation. We'll take a closer look next.